Hey everyone, welcome back to AWM Insights. We are your co-hosts, Erik and Brandon Averill. We usually have our CFA, Mr. Justin Dyer, on with us, but he is celebrating and welcoming in their fourth child. So shout out to Justin and Kat. Hope you guys are getting some sleep, and hopefully Brandon and I don't do everybody a disservice without our CFA expertise. But we have a ton to talk about this week. Of course, we have an election. We're taping this on Friday at about noon Pacific, but we don't have a president, at least not yet. It looks like things are trending towards a Vice President Biden, but it is 2020, so we would not be shocked if we come out with a different result. Each candidate does still have a pathway to becoming elected as a president, but Brandon, most interesting thing is, once again, markets are doing absolutely something that nobody expected.
Oh, well, Erik, I can't believe you didn't bust out your crystal ball for this one. I mean, you talk about it all the time.
I left it at Halloween, you know?
Yeah, well, yeah. I think a lot of people would have loved to have you look into that crystal ball and tell them what was going to happen. But yeah, I think you're exactly right, Erik. We're seeing here again, just another situation where, we've got an uncertain outcome, but we're seeing markets react, to the information as it comes out. We've preached this before, but markets are extremely efficient. So, when we see Biden take the lead, we're going to see markets adjust to that. When we see that we're likely to have a split government and we may have a Republican Senate, we're going to see the markets react to that as well. And it's certainly played out this way. So markets move quick, they adapt to the information that's out there, and we continue to see that.
Yeah. And on previous podcasts, right, I think we have been trying to bring into crystal clear view that there's more than just who the president is that is going to move markets. We have really strongly tried to say the returns are detached from short-term news of who is going to be in the White House. And just to point out what's going on, I mean, we're seeing the best week in the market since April. We're in the middle of a pandemic. This is wild what is going on, that in a market that hates uncertainty, I mean, the best week since April. Then all of a sudden we've got the jobs report that comes out and it's outpacing expectations in October, completely defying what so many of us think is happening of a slowdown in the economy. So we see how markets are reacting to the jobs data. One of the things that there was a big fear previous to Election Day is what happens if Vice President Biden becomes the president. I mean, taxes are going to go through the roof. Companies are going to really be hurt from this type of election. Yet, why are markets going north if it looks like Vice President Biden's going to be in the White House?
I mean, that's a great question. I mean, everybody's going to pay 63% taxes, right? That's a given. I mean, we got Biden's taken over. I think it's a good point, Erik. I mean, what we're seeing here, that's the reaction to the potential for a split government. I mean, if we're looking at the stats today, but it looks right now we are going to have a split government, and it's unlikely that a lot of the tax policy changes that, potentially future President Joe Biden has put out there probably won't get enacted because we'll probably have a Republican Senate. At least that's what it looks like as we sit today. So, we won't see that corporate tax rate go from 21% to 28% most likely. And that's what Wall Street's digesting right now and implementing, right? Where that's part of the reason we're probably seeing a rally in the markets this week is that's good for big business, pay fewer taxes. Kind of along the same lines, I thought it was kind of fascinating. We saw a number of states pass marijuana bills to legalize marijuana. I think there are a lot of people, when you just look surface level, think that's an absolute boon and how fantastic is that. But when you go to look at the marijuana stocks, the pot stocks, they're not doing as well. And the reality is this is an implication too of a split government. If we had the full blue wave, we had heard that we're going to have the decriminalization of marijuana. But now we know that, with a Republican Senate, you're probably not going to get a federal legalization of marijuana. So they're actually struggling. So to me, this just goes back to the markets are very intelligent. They're going to adjust to, the information that's out there. But sometimes, when you make certain high level assumptions, you have to dig a little bit deeper to understand what's actually going on.
Yeah, and bringing back to the core tenets of investing, I think these individual events, right, create a ton of noise where you start to try and predict the unpredictable. And another thing that completely changes the way markets have behaved in 2020 has been monetary support, right, from the central banks. We're seeing what the ECB is doing. And so I think there's a little bit at play right now too, is even when we're starting to see all of these different stressors on the market, you have monetary stimulus that is truly impacting it. And so really the question becomes, what do we do? And the mistakes we're seeing that so many of the average Joes, the amateur hour, and we don't mean that in a disrespectful way. It's just the difference between being an amateur and being a pro is we had clients ahead of the election. We had a lot of people sending us text messages, asking these questions, calling us of saying, hey, I'm really nervous that someone other than who I want to be elected is going to be elected on both sides. Should I get really conservative? Should I take my money out? What should I do? This is no different than in 2016 when if President Trump was going to be elected, everybody thought the markets were going to crash. We woke up in the morning and they were roaring. And so what are the key tenets that we have to stick to in a long-term investment plan?
Yeah, I mean, Eric, I think that plan, that's the key thing there, right? If we're all focused on short-term movements in the markets, then I hate to tell you, but you're probably not in a very good spot. So if you're not a long-term investor, if you truly haven't set up your plan to be a long-term investor, yeah, you should be nervous right now. If you're relying on the market going one way or the other, this week or the next couple weeks, or even in the next couple months, that's a difficult place to be in. And I think an unrealistic place to be in. You're essentially gambling on that side of it. So I think the key tenet here is, really understand what it takes to meet your essential needs. Understand, like, if we go through a period of acute stress, are you immunized against that? Are you in a position where you don't have to touch your long-term investments? Because, we've talked about this previously in the podcast, this, like so many other things, this election, it has no long-term effect necessarily on your market performance. Doesn't matter who the president is if we're thinking long-term. And so that takes away that need for that crystal ball. If you're relying upon trying to, work the game of trying to predict what's going to happen, I think it's never going to be a good investment experience for you.
And a lot of what I hear you talking about is, what does the evidence say? The good news is you parked on market participation. So if we zoom out real quick and actually remind ourselves of what are we doing in the stock market, it's a belief that companies are going to be more profitable in the future and that there is a positive expected return regardless of what's going on. It's actually a belief in America. It's belief in the businesses, regardless of who the president is that we live in this incredible country where businesses are resilient. They're going to adapt to the environment and they're going to produce a positive expected return. And so as an investor, the good news is you actually don't need to increase the risk of guessing which individual company may or may not survive. We can actually put our money in the overall market and the efficiency, saying that we're betting on business going forward. We're betting that regardless of who's in the presidency, people are going to eat food. People are going to buy goods. They're going to buy services and move forward. And so when we take a step back saying, stop adding risk to your portfolio, start going to the things of diversification, of lower expenses, making sure we're maximizing after-tax returns and participating in what the market has for us as opposed to trying to rely on that crystal ball.
Yeah, no question. I think, the other thing we have a saying around here, right? Financial structure beats the portfolio every time. And I think, when you have to, for advisors out there that might be listening, when you're competing on the portfolio, you're doing yourself a disservice. You're doing the client a disservice. You might be putting them in a position where they can't achieve the outcomes that they actually want, right? And I think, as an advisory base and clients and people out there listening, I think the things to focus on, right? Focus on the outcomes that you want. You know, your return doesn't really matter compared to your neighbor's return. It's all about achieving the outcomes that you want. And then the way that you're going to do that most successfully is through your financial structure. Don't try to guess and make the quick buck. We all know that that's a fool's game. Focus on your plan. Make sure that you're efficient, like you said. Make sure after tax returns, what actually hits your pocket so you can get those outcomes is where you focus.
And that's a great takeaway. It's the benchmark for each individual investor is what is the after-tax return that hits my pocket and helps my family multi-generationally. Not today, but how do we achieve the priorities and the outcomes at different parts throughout our lives? And that's what your investment plan should be. And so if you guys have enjoyed this, we would love for you guys to head over to Apple iTunes, give us a review. It helps promote the show. It makes sure that there are other investors can get access to the same information that you do. And as we move forward and election results do come out, we have more information around the tax plan. We're going to be really focused going forward on what those implications are for your portfolio. And so make sure that you don't miss out on any of the upcoming news. Head over to awminsights.com, hit the subscribe button, make sure that we are staying on top of everything that we can to provide value to you guys. And until next time, stay humble, stay hungry, and always be a pro. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.